Ministry of Finance in January, attached and marked as DD57, we highlighted the challenges we faced with Steinhoff in our attempts to influence better governance there. The PIC had voted against the primary listing to Frankfurt in 2015. We voted against non-executive directors who have served on the board for a long time as their independence was called into question. We lost to the democratic process of annual general meeting because Steinhoff was the darling of other institutional investors who combined carried enough votes to push through resolutions.
Dr. Majila, if I can refer you to slide 19 of the presentation made to SCOF. There's annexure DD 57, page 551 in the main annexure bundle. Dr. Majila, this is a table illustrating the difficulties that the PIC had with Steinhoff. Is that correct?
That's correct.
Will you just take us through it briefly?
Commissioner, the page here shows some of the challenges we had with Steinhoff and how we have responded to them. First, the PIC votes against Steinhoff at AGMs, where we voted against certain resolutions. As I said, 2015, we voted against movement of primary listing to Frankfurt, but we lost because it listed on Frankfurt Stock Exchange because other investors felt differently. 2016 AGM, Monday 30 May 2016, we voted against reappointment as a member of a supervisory board. We didn't vote for Mr. Donant, Dr. Connor. We questioned their independence given the long board tenures already. In the AGM of 2017, Tuesday, 14 March 2017, we voted against authorization of management board to issue shares to the extent of 5%, more than 5% of the company. I think those are the basic issues. And then we also wrote a letter to Steinhoff in December 2017. This, I guess, was shortly after the collapse, that we would like Mr. Vice to step down. We needed to appoint 2 independent non-executive directors on the board of Steinhoff, and then PIC representation on the board committee tasked with investigating Steinhoff affairs so as to ensure that the process is transparent and that, amongst other matters, the terms of reference address critical governance issues raised above under consideration. So this is what we did as part of our interventions in Steinhoff.
And you've said that those interventions were ultimately unsuccessful.
Yes.
So what happened then?
I think, if I may quickly, I think eventually Dr. Connor was resigned from the board, as well as Mr. Vice. I think we more or less were able to get what we want, but not necessarily in an AGM, as one would expect. Yeah. I think we are fine there. We're fine. Commissioner, can I proceed? We are now on 374.
Yes, please.
Yeah. The best option for PIC to get its voice heard was a closer proximity to governance. Thus, when Mr. Jayendra Naidu approached us with an opportunity to buy up to 3.5% of shares in Steinhoff that carried a special voting rights and a seat on the board, we thought, Eureka, we have found the solution. Steinhoff was the 5th largest stock on the JSE All Share Index in 2016, before the collapse. A tight tracking error of 0.5% per annum as per GPF mandate meant that structurally we are mandated to hold in a region of 4% in the equity portfolio to satisfy the mandate requirements. I refer to slide 19 in the 2018 SCOF presentation as well, which is now 552, Commissioner.
That's page 552 of the main annexure bundle, the next page after the one we've just dealt with.
So what this page shows is I think we spoke about the tracking error in the beginning, which is how much the portfolio can deviate from the benchmark that the client has provided to us. Now, at the global level, the tracking error must be about 1.5% maximum on an annual basis. It's measured on year. That's how much you can deviate from the benchmark. But we've decomposed this portfolio into a passive portfolio and an active component of it. The very passive portfolio has to have a tracking error of less than 0.5. Now, out of that, it means structurally we have to hold a certain amount of shares in a company like Steinhoff, even if we don't necessarily like it, even if we don't have a view, or even if we have a strong view on it, we can only underweight it to a certain point. Or if we completely don't like the stock, we have to approach the client and recommend an adjustment to the mandate. That has never happened before in the past. It's ever since I was involved with the PIC. But those are things that we can propose to the client to make adjustment to if we believe, and they agree with us that the risk is just too high. So there are those remedies. So in this instance, Steinhoff was almost number 5, performing very well. It was the darling of the stock exchange, as we all know. We were slightly underweight, and we couldn't deal with governance issues because we were not represented on the board. So when Mr. Naidu approached us with an opportunity to invest 3.5%, we were happy to do that, to take this opportunity, because on 552 it shows how underweight we were at that time. On the 30th of June 2016, we were 10 basis points underweight. That is the active position. Minus 0.10 means that we are 10 basis points underweight. So to be at weight, we needed, if we wanted to be at weight, which is closing this to 0, means that we have to purchase a certain number of shares. And this 3.5% additional purchase was not going to take us to a complete at weight position or meeting the weight. We were still slightly underweight, but better than before. You can see by the 30th, obviously the market weight of the portfolio kept changing. If you see a lower weight, it reflects the fact that the stock was now beginning to drop in the price. Was beginning to drop in the price, but nothing related to the disaster at all at that time. So the key reason for us to buy additional shares was to close the underweight position and use those shares that carried certain special voting rights to get into the board through Mr. Naidu. That is, in essence, the rationale for the transaction.
Just to understand something, so the benchmark was 4.21 in the first one, and then you had 4.11, yeah?
Yes.
And so you purchased that 3.5% to get to the weighting, basically,
Closer
to get
to the
closer to the weighting. So
the benchmark.
that 3.5% is not the weighting, it's the additional shares to get you to the weighting.
Yes.
Is that correct? Is that correct?
So the 3.5 shares is the total weight. Sorry, the additional 3.5 shares simply is an amount that moves our weight closer to the benchmark, but not there, you know. Now, in terms of rands and cents, it looks big. It's like 9 billion.
Yes, yes.
But you are dealing here with a close to 120, 150 billion company. I think it was 150 billion rand company. So you can see what 9 billion is of that 150 billion rand company at that point.
And even after buying that 3.5%, you're not close to you were not benchmark, you're not even to the benchmark.
Yes, it moved the needle quite a bit closer to the benchmark, but not completely
Completely
to a point
close.
where.
All right.
Yes.
I understand.
So we did this transaction, Commissioner, I will explain in line with the BE funding policy that I spoke about earlier, but we'll explain as we go along. On 375, if I may proceed, buying of 3.5% of shares in issue will bring us closer to the benchmark weight, as we discussed. We could also have bought the shares in the open market to close the underweight position. But the issue here is that the shares that are in the market do not give us those special rights that are attached to these shares that Mr. Naidu was bringing to us. That is the difference in this instance.
Just to clarify, I'm not asking questions, is that the voting rights, did these shares have more voting rights? Or
Yes, they carried special voting rights.
Yes.
Yes, I can't remember by the ratio, but already with 3.5, we were going to get a board seat.
Okay.
Just with the 3.5.
Oh, I see.
Yes.
I see, okay.
I think in most cases, the company may consider giving a board seat if you hold more than 10% of issued share capital. So with what we have at about 3.5% additional, we would get a board seat anyway.
Sorry, just given that this has been raised and questions were going to come later, but when you say we, who are you referring to? Because it wasn't the PIC that got the board seat. It was Mr. Naidu.
That's true. It was Mr. Naidu, but we saw him as a representative of the PIC now, because he represents the PIC and we are together in the Lancaster structure.
Sure, but
Yes.
it was not the PIC per
It was
se.
not the PIC, yeah. Thanks, Commissioner. 376, the losses incurred through the PIC investment in Steinhoff were significant and deeply regrettable. Now I'm talking after the disaster. And I take full responsibility as the head of the organization, PIC. However, in defense of any unjustified allegation of ineptitude was with regards to exposure in Steinhoff from those who seem to have 20/20 vision in hindsight, the question is posed should not be why was the PIC duped by Steinhoff, but rather who wasn't duped by Steinhoff. Moreover, as the depth and breadth of the carefully orchestrated malfeasance at Steinhoff committed over several years is only now beginning to be exposed, there was no way any prudent investor, either here in South Africa or abroad, would have been able to detect these irregularities. As a retail group with a global presence, Steinhoff was considered a sound investment and the darling of the JSE, as well as various other stock exchanges around the world. However, the fact remains that PIC's exposure in Steinhoff represented less than 1% of the PIC's assets under management, but material in value. And it was one of over 300 securities in the PIC portfolio, so the loss was thoroughly cushioned. This is the benefit of a diversified portfolio. A single stock cannot sink such a big portfolio that is well diversified. The portfolio is able to withstand one or two of these sorts of disasters. But if this happens on a bigger scale, it will have a dire impact on the portfolio. So we must learn from this. Finally, I would also like to ask the question that every asset manager who invested in Steinhoff is asking, and that is, where were the auditors when these malfeasance were being carried out? Obviously, like any investor, the PIC was and will always be totally dependent on audit reports to make prudent investment decisions. If the system collapses, then every investor is in big trouble. The PIC has proposed a policy of auditor rotation for companies in general, which will have prevented the same auditor from serving a company for more than 10 years. So, Commissioner, this is what we proposed, and we spoke to IRBA, that's the independent regulatory body, board of auditors, that we believe that maybe auditor rotation can assist after every 10 years. This has to be done. Although we had resistance from big companies, especially the multinationals, that said even 10 years is not enough because their companies have become so complex that, you know, to change an auditor can be a very costly exercise if they are global in the sense that they are. And our argument was that, but when they collapse, the impact is even bigger than the cost of rotating that auditor over time, and they can be done. I'm sure there can be a process of doing such a rotation over a period of time, but that's what we have proposed to IRBA to consider. Lancaster 102, 101 and 102.
Can I suggest that we ask any questions about Steinhoff so far and then come to Lancaster, although the two are very interrelated?
Thank you, Mr. Commissioner. My colleague, Mr. Mohapi, will do the questioning.
Thank you, Mr. Commissioner. Dr. Majila, this is a question that has arisen previously before the Commission. So in monetary terms, what is the PIC's exposure in Steinhoff?
I don't have the numbers now, but in the listed space, as you will be well aware of, the drop has been in excess of 95%. In terms of the value in the direct listed investment, but yes, we also have the Lancaster structure that we need to factor into. We can get the numbers, latest numbers from the PIC, to show how much a drop or losses we've taken in Steinhoff because of the fall in the share price.
Okay, then my other question in relation to Steinhoff is your use of the Archimedes expression that when Mr. Naidu approached the PIC with the prospect of having voting pool shares, you saw that as a good thing. How were the mechanics supposed to work in relation to the PIC and Mr. Naidu of exercising those rights?
Commissioner, the idea was that we would subscribe for shares in the structure that we created in terms of Lancaster. But then that structure, because it carries a board seat, then Mr. Naidu will represent the structure onto the board, and therefore the PIC by association onto the board of Steinhoff. Okay.
Yeah. But then it seems to me that the second phase of the PIC's subscription of shares, which we will deal with in Lancaster, is predicated on a Mr. Jahindra Naidu, the person exercising such rights.
You mean in terms of
The
sitting,
voting, yes.
sitting on the board and
Yes.
representing the, yes, that's the idea. That's the idea.
Thank you.
Can I ask you, when you looked at Mr. Naidu, following on the question there, who was in his consortium?
At that stage, there wasn't anybody. He was by himself. But in the structuring of the deal, it was contemplated that he was going to broaden his consortium. But most importantly, there's also another BE component that was supposed to be broad-based, which was supposed to be populated by the board of Lancaster 101 that includes the PIC. I don't know how far that process has gone, but that was the work that was supposed to be done by the Lancaster 101.
So in essence, J. Naidu as an individual came to you with a proposal to buy Steinhoff shares for 10.4 billion. You then agreed to fund J. Naidu for 9.4 billion and you bought shares for 9 billion.
Let me clarify that, Commissioner. Mr. Naidu approached the PIC with an opportunity to buy additional 3.5%. And we created a structure where Mr. Naidu is also a participant to a tune of 25% in the structure. And
No,
he
I'm
was-
not coming to Lancaster. I'm coming to the initial proposal, because the Lancaster we're going to come to. But at this point in time on the approach, it was J. Naidu as an individual that you committed to work with.
That's correct.
That's correct.
That's correct,
Yeah?
yeah.
And in that, he came with the question that he would get a board seat on Steinhoff with
This
that
is the right.
funding as a director. He would be a non-executive director on Steinhoff for that. And for whatever reason, it went from 10.4 to 9.4. And I just want to go to I think it's Mr. Rasiroka's statement. I won't be a second on that. If I can easily find my documents. Mr. Rasiroka's statement before the commission was, and I'm quoting him, the transaction from 10.4 to 9.4, quote, I can only speculate that the reduction was to enable the transaction to fall within the mandate limit of the IC in terms of the specific product category, which if exceeded would have resulted in the transaction needing to go to the full board of the PIC for approval. The transaction needed to meet the timeline set by Steinhoff as a result of their closed period, which was being around the first week of August 2016. So the cost of this was 9 billion shares, a transaction cost of 100 million, a ratio collar premium of 350 million, so the total cost was 9.4 billion that was spent, based on one individual.
I don't think we can look at it. I mean, it looked that way, you know, but as I said, we could have bought the shares in the market anyway.
So why didn't you?
Because the shares in the market don't carry the same benefits of having...
But the benefit went to Mr. Naidu, not to the PIC.
But
In
he-
essence, in that, you actually, I'm asking the question, in doing this with Mr. Naidu, and you've chosen this as the deal, is it not a disproportionate right bestowed on Mr. Naidu? And does it prejudice other shareholders?
Commissioner, we always appoint people on boards of companies when there's an opportunity to do so, and they are individuals, and they carry our mandate when they sit on that board, by and large. Although you may argue that they are fiduciaries to the company as well, but there are things that they are expected to drive on our behalf. And so asking Mr. Naidu to do that, I didn't see any problem with that, quite
And
frankly.
did he fulfill any obligations to you that improved your relations with Steinhoff?
He sat on the board as expected, but then the share price fell and we had to do a reorganization of that. He's still in Lancaster as he's supposed to be, and I think they are proceeding.
But the objective was to improve governance, and you have indicated the governance issues
Yes.
There are two questions that I would have, given what you have set out in your submission to SCOPA. Did this not ring some alarm bells that warranted other action rather than a question of getting somebody on the board? I mean, if you look at your demand, Ms. Dr. Visa to step down, a question of directors, non-exec directors who've served for too long, doesn't that warrant the very question that you raised? You could have gone to the GPF and said, we've got some concerns here. Because the question for me would be, why would you buy shares to influence governance rather than returns? And if we look at the outcome, which was unforeseen, absolutely, the Steinhoff question was unforeseen, but you're investing to influence governance when you've already got concerns. Does that not warrant, in your own responsibilities and engagement with your client, to say, we have concerns here, what are your views?
Commissioner, I think it's important to highlight here that we were dealing with a stock that is number 5 on the exchange. You know, one of the best stocks at that time. We had concerns about governance. We couldn't find a way of getting to be heard. And when we got these shares that gave us an opportunity to be heard through Mr. Naidu, we thought we could use that because already we were invested. We probably held about 9% or so of shares, of issued share capital of Steinhoff at that time without a board seat. Without any board seat. We've demanded a board seat. We failed. And so these rights that gave us at least someone, they may not be perfect, but at least someone that can represent us on the board. That, I mean, we saw that as an opportunity. And also it's very important to highlight that governance is extremely important in the performance of companies.
Absolutely, that's exactly why we're here.
Exactly, the return generation of any company is normally due to an appropriate board that's able to drive wealth creation and manage the risk of the companies properly. That's why representation of the board, on the board was critical for us. We never felt it was necessary to go to the client to say, change the mandate or let's reduce or let's not invest in this stock, because it was performing. It was one of those stocks that were doing exceptionally well, you know. And so the only way to do it was to find ways of influencing governance on the board.
Mr. Raziroka's statement about why it went from 10.4 to 9.4?
I think that is, we reduced it to be in line with IC, Investment Committee, so that they were able to approve it. I mean, if we could have gone to the board if we wanted to anyway, because the IC recommends to the board. You know, it's a committee that will simply recommend to the board. So, but it was more convenient for IC to deal with that matter at that level.
How many occasions have you altered the amount to be invested so that it does not go to the board?
Commissioner, I can't recall.
Common practice?
Yeah. I think not common practice, but it's sometimes necessary. It really depends on circumstances.
And what would you define as necessary circumstances?
It may be issue of timing. Most of the time it's about timing. I mean, markets, you know, you have to be in as quickly as possible if we have a view.
I think that's a theme that runs through quite a lot of the statements and witnesses' evidence before the Commission, that they took certain decisions because of the timelines. They bypassed certain process because of timelines. Is it correct to make investments of this scale with under pressure of timeline? There's always going to be a timeline. There's no question that there's timelines to things, but the question of saying we're taking decisions in order to meet timelines that in fact affect the decision-making and the quality of decision-making, that people react under pressure. We've had many witnesses who've come and said we took that in that manner because of the time pressures and demand for completion.
Yeah. Commissioner, within the PIC, there's always time pressure. There is always time pressure, and time is important as to when you get in and out. This
Time shouldn't qualify.
A 10 billion transaction, if I may, Commissioner, a 10 billion transaction within the PIC environment in the listed space is not something extraordinary because of the size of the portfolio. We've traded shares of the tune of 10 billion or more within a short space of time because the asset is known to us. It's listed, the team has got models, and in fact I need to correct someone in this, I think it was Mr. Ndaza who said PIC does not have a model in his statement to this commission. There is a comprehensive model on Steinhoff within the listed equities department. So they knew the stock quite well. The matter at hand here of buying the shares was more to do with structuring of the transaction to allow BE to come in, more than just an investment as we would do in the normal course.
Sorry, did you say to allow BE to come in?
Yes, this was.
But BE, one individual is not a BE deal. I'm sorry.
But Commissioner, we said there's a board of Lancaster that was supposed to make sure that the BE is broadened. That was the mandate that was given to the board of Lancaster.
We're going to come to Lancaster in a minute. Yeah, but be that as it may. So in essence, what you're saying is that your confidence in one individual to make that kind of impact and transformation and represent the PIC with that extra governance weight warranted the time and the question of 9.4 billion in that individual.
Because we expected the B to be broadened over time. That was the idea.
Thank you.
Maybe an individual in the beginning, but the idea was to broaden the transaction, the participation over time.
Okay, thank you.
Just a question on Steinhoff. And I'm not sure whether I asked you the question. Please tell me if I did. There's a worry about the voting, in terms of improving corporate governance in general. I mean, the PIC has been doing some good work in there in terms of proxy voting and REMCOs and the other things. But why aren't the other asset managers and pension funds doing that? Because the PIC can try to change these things, but if it doesn't have enough votes, the companies are going to continue to do as they please. What is the problem here? Why can't these asset managers and pension funds actually do the proper thing?
Well, I don't know what sort of reservations they have, in seeing the light in what we're trying to do, If I'm allowed to use the word, we're trying to preach the gospel, but there are not, people that we can turn around to believe what the PIC was doing, And that's what it is. I mean, if we try to persuade and consult with them, we may be accused of, breaking the law, acting in consent. Consent is the word that is used.
Consent, yeah. Yeah.
So, the PIC would continue to do what it's supposed to do and hope that other investors will see the light and start voting in line with what the PIC does. Unfortunately, there's a lot of probably advocacy and persuasion that needs to be done. along
Yeah, yeah.
the PIC's strategy of ESG.
Yes, because probably if the PIC and the others did what the PIC was trying to do, maybe major losses could have been avoided. It's possible that the shareholders and pension funds could have come out better than what is happening now.
That's true. I think in the case of Steinhoff and many others where we've voted against certain resolutions, unfortunately, in an AGM where other institutional investors have a different view and they're in the majority, you lose.
Mm-hmm.
That's the democratic process of the AGM, unfortunately.
All right, yeah.
We can only try.
Okay, yeah, thanks. Thank you.
Thank you, Mr. Commissioner. Dr. Majila, if the PIC and obviously through your client, the GEPF, was not going to increase its underweight position in doing this particular deal with Mr. Naidu, what other options were there for it, realistic and reasonable options were there for it to increase its position?
Again, commissioners have explained we could have bought the shares in the open market, but those shares would not necessarily give you special rights. So we needed to buy a lot more to have the same impact as 3.5 that gave us a board seat immediately.
When you say a lot more, how much more?
Well, I would assume that a critical mass of more than 10% to 15% will make sense for us to force, to entitle us to probably calling a board meeting according to the Companies Act, I think, to call an AGM and propose resolutions to be voted on, and that's the remedy that we would use. But it would require probably a same, if not more, proportional number of shares to buy to increase that weight.
Okay, so these shares had the attraction then of increasing the underweight position as well as giving you some voice with regard to governance through
Absolutely.
Mr. Naidu.
That's correct.
Now, we know that Mr. Naidu was not a PIC nominee director, but was there anything to indicate that he would not be amenable to representing the PIC's position on the board of Steinhoff?
No, that was what was agreed. And when Lancaster was put together, that he will go and represent the Lancaster/PIC on the board, because PIC, in all intents and purposes, it owns about 75% of the structure.
Then you were asked about timing. Was there time pressure in respect of this particular investment?
If I recall, it was very important for us to finish it ahead of the close period that was coming. Otherwise, we would have waited another few months to get out of the close period and execute.
And then lastly, in respect of the purchase price of the shares, lowering it from 10.4 billion to 9.4 billion. Two questions there. Is there anything that prescribed what the share price for that percentage of shares ought to have been?
No, not necessarily. I mean, we were working on at least anything between 2.5% to 3.5% of the shares to entitle us to that board seat. So I would assume that in instances where the share price would have run hard, we would scale down the number of shares slightly to make sure that we don't have a huge exposure.
And was there anything fundamentally untoward in having this particular transaction considered by a subcommittee of the board, namely the investment committee, as opposed to the actual board itself?
No. As I've explained, if it had to go to the board, the investment committee recommends to the board anyway.
Thank you.
Sorry, I'd just like to follow up that last question, because I would have thought in governance terms it would be a concern that, as you have said earlier, Dr. Machila, unless I misunderstood you, that the original amount of 10.4 was reduced to 9.4 precisely to ensure that it was within the investment committee mandate. And therefore, the question that you then followed it up with was that, well, it wouldn't matter really if it went to the board because the board responds to the investment committee recommendation. Are you saying the board's oversight of these investments, which is a key function of that board as it's currently structured, is a rubber stamp?
No, not necessarily, Commissioner.
But it would be if you're saying, as you have just said, that it would make no difference because the board, it would have been the same thing because the board would listen to the investment committee's recommendations. So there's no interrogation of it.
No, there is a lot of interrogation, Commissioner.
Then
Well,
why
I don't
would you
think the
avoid a
commissioner
board interrogation?
The commissioners mustn't get me wrong. There is interrogation, but there's never been a moment where the investment committee recommends something to the board and it doesn't happen. I can't remember, those instances. Not that the board doesn't apply its mind, Commissioner.
And Dr. Machila, you say you don't have power.
Sorry, I say, Commissioner, I beg yours?
So Dr. Machila, you say you don't have power, that a board has never rejected an investment committee decision.
But I'm not the investment committee commissioner. I'm just a member of the investment committee.
Just a follow-up. In terms of that 3.5%, there was an SPV there, and the PIC owned 75%. Did that include the voting rights, in a sense that whatever Mr. Can I do ne? Yeah, whatever he was going to do, the PIC actually controlled the SPV?
Yeah.
Because it had a 75% voting rights, is that correct?
I think the idea here was that insofar as the shares are concerned, including the PIC shares that we have already bought, in exercising any decision of the PIC through Mr. Naidu, right? They will be able to do so regardless of whether PIC own majority or not.
Oh, I see.
Yes, he's a representative who will say, this is what we would like to see change in the company. We would like the board to change, we would like so-and-so to resign, we would like to have 2 of PIC nominees sit on the restructuring committee so we can fix the terms of reference, those kind of things. Yeah. That is what Mr. Naidu has to present to the board on behalf of the structure and the PIC. Yeah. That's in essence what the role that we played, not that. Yeah.
Who controlled that structure?
It's the PIC.
It's the PIC?
Yes.
So in many ways you could actually tell him to do things because you control the SPV structure.
Yes.
Because of your 75%.
That's absolutely correct.
Okay.
So the current, given that it was a commitment of 9.4 billion rand, and the amount now outstanding in terms of that investment, my last understanding of that, or the numbers given to us, was about 11.6 billion.
Could be about 11.6 billion if we include the interest that is.
Sure.
Yeah,
well, that's what's owed as well.
Exactly.
So that investment now stands at an obligation to the PIC or a loss to the PIC at this point in time of 11.6 billion.
That's correct. But if we were to decompose the structure further, there is a collar structure that then has value.
Sure.
And that collar structure, it has value, although it's being ceded to 100% owned subsidiary of Lancaster. to raise another 6 billion from Citigroup, from
Sure.
a bank, to buy
The Star shares.
shares in another company that so far has performed very well. It has done fairly well in terms of value. So the put option value is not at risk at this stage. And besides, it's backing a subsidiary of Lancaster 101, which is Lancaster 102.
Yeah, we're going to come to that now.
Yeah.
Thank you.
Just another question there is that the BEE trust or BEE issues in this transaction, this 3.5, was it a CP? Was it a condition precedent or
It was
not?
post. These B structures were still going to be formed, and the board of Lancaster was charged with the responsibility to go and execute the BEE,
Yes,
the broad-based BEE structure.
Yes, yes.
Yeah. Participants, identify participants
Okay.
and populate.
So it was a
the-
post, it was a
Yeah.
post there.
Yes.
I hope we can go to the next one.
Thank you, Mr. Commissioner. Doctor, the next topic is a related one of Lancaster 101 and 102, paragraph 379.
I'm on paragraph 379, Commissioner. The ultimate purchase of 2.75 shares, additional shares in Steinhoff, facilitated by Mr. Naidu, was done through a structured investment product portfolio within the PIC, utilizing the new BE guidelines. The
Sorry, if I
guidelines
can
will-
just stop you there, Doctor. Those guidelines are Annexure DD 26. Is that correct?
That's correct. We happy with that, Commissioner? We can proceed. Yes. Okay. All right. The allegation that the PIC gave Mr. Naidu 9.35 billion is not correct. This loan was not to Mr. Naidu, but to the SPV itself, Lancaster 101, wherein the PIC on behalf of clients owned 50%, the balance of 25 to Mr. Naidu and his consortium, and 25% to broad-based black empowerment groupings to be identified. The PIC is represented by 2 directors on the board of L101 in order to participate in the identification of the BE groupings, which had not been identified at the time of the conclusion of the transaction. Steinhoff, like many South African companies, sought to sell a stake to a BEE-owned partner as the government requires of businesses as recompense for the discriminatory sins of the past during apartheid. Lancaster took out loans from the PIC to buy Steinhoff, to buy sufficient shares in Steinhoff, which would make it possible for a black director to take part in the governance and the setting of the strategic direction at Steinhoff by becoming appointed as a director of Steinhoff via Lancaster.
Just in these paragraphs where you refer to Lancaster, you're referring to...
Lancaster 101.
Yes, L101.
L101. Prudently, as part of risk management strategy, the PIC put together a derivative insurance structure that provided downside protection in case the share price collapsed. The risk report raised a number of risk issues, which we believe were either sufficiently mitigated or accepted as the stock was expected to generate commensurate returns. This protection in the form of ratio collars was extensively covered in the statement of Mr. Raseroka and Ms. Botsang Morobe. I'm very proud that the PIC is now producing experts in the field of financial engineering.
And this is where you started actually when you joined the PIC.
Absolutely.
Yes.
Absolutely.
Okay.
Can I proceed, Commissioner?
Yes, please. Yes.
One of the most significant influences of Lancaster 101 on Steinhoff was the creation of Steinhoff Africa Retail, STAR, in 2017 to spin off the retailer's African operations. Star is now known as Pepco. It changed back to Pepco Holdings Limited. The vision was to create an Africa retail champion that will compete with the likes of Walmart, Tesco, and so on, in order to show that an African entity leads the African retail sector. This was an important part of building block in our vision of building a portfolio of Pan-African champions in the key sectors in the continent. EcoBank being the first champion in the banking sector, and Dangote Cement being the champion in the cement and structural industry on the continent. Star made a lot of commercial sense as well as provide a risk mitigation because of better quality and visibility of earnings as compared to Steinhoff. In order to fund this opportunity, a new SPV in Lancaster 102, L102, which will become a wholly owned subsidiary of Lancaster, was created. To fund the purchase of Star by L102, L101 ceded its ratio collars to a bank as a guarantee for a loan of 6 billion towards Star shares, of which the PIC is a beneficiary through its shareholding in Lancaster 102, a subsidiary of L101. With the collapse of the Steinhoff share price, this protection kicked in, resulting in just a loss of about a third of the investment in the portfolio of Lancaster 101 and 102, compared to more than 90% drop in Steinhoff share value on the open market. Again, all of PIC internal checks and balances were followed to the latter for this transaction, and it is unfortunate consequence of the Steinhoff saga that we've lost value in the share price.
Just to be clear that we're not talking about the huge losses which were made in the passive portfolio and in the externally managed portfolio. Here we're just talking about the structured product here.
Yes, here we are looking at that
The Lancaster.
35 billion.
Yeah. Yes.
What the total loss has been.
Yes.
So if you look at the naked structure, in other words, if you bought shares only, if you were exposed to shares only, you would be out of the pocket to the tune of more than 90%.
Yes.
But if you look at the structure with the combination of the ratio collars plus moving some of the cash into Pepco, which has performed quite well, has been quite resilient in the current environment, in total preserving almost 2/3 of value in the structure.
Yes. But saying that the PIC lost a lot of money in the passive portfolio, the normal passive weighting, and in the externally managed asset managers, which is separate to this issue. Isn't it?
That's correct. That's correct.
Billions and billions, but
that's correct.
People lost money, across the board, isn't it? Yeah.
That's correct.
Okay.
That's correct. Mr. Paul Magula, in his statement to the Commission, makes a claim that the PIC, by ceding its ratio collars to Citibank in return for a 6.3 billion loan to Lancaster 102, means that PIC has given away its value. This is not correct. First, it is important to remember that L102 is a 100% owned subsidiary of L101, and the session, therefore, was to assist a subsidiary to raise funds to invest in Star. Secondly, the ratio collar was European style. In other words, the derivative position can only be exercised at the end of the structure, as opposed to an American style that you can exercise at any point in time when you hold those rights. So that is the difference. So in short, the zero cost collar, we are tied to it until maturity. But there is an ability to unwind that position, but it will cost us quite a bit in terms of value to unwind such a structure. The penalties are quite huge if you do it earlier than before maturity. So it's a European style. Thus, it is exercisable at the maturity of the structure, which has the effect there is value in the structure, but this value cannot be realizable immediately. Lastly, the Star, renamed Pepco Limited share price, has held up quite well around 18 rands. I think it came into the market at 18. It's been hovering around this value. In essence, all it says is that there's preservation of capital by moving 6.2 into this structure has helped quite significantly in cushioning the losses. It is strange that Mr. Magula...
Just a question. So, are you saying that in the event that you hold this collar up to the end, up to maturity, you might actually get some value, depending on how Steinhoff does in the next couple of years? Is that what you're saying?
I think, and we spoke about this sensitivity analysis. The commissioner asked about it earlier on. Most of the time, dealing with reputable banks that have played in the derivatives market and other risk management structures quite successfully. And for them to be in the structure means that they never expected this so-called 2 sigma event. They will model a put option around the loss of 25%. So if the share price falls by 25%, this is how we can unwind and therefore protect ourselves, If the share price runs, it's fine. You don't have to worry about capital because capital is growing from the shares that you're holding. You're more concerned about cutting down the potential loss in capital by creating these structures. Now, the collar, on the other hand, because you've now financed the insurance through sale of upside a little bit, it gives you room for value up to a certain point. From then, you can't participate. It's the banks that have given you that structure that will participate in the upside. So normally these banks will do their own rigorous modeling and say, but this share price is so solid, it's been like this forever. They don't know that there are shenanigans as well like we do. And they provide this protection. And over time, as the share price move up and down, they hedge their position so that in the end, they realize some value through trading of the shares as they manage the risk to themselves. Now, with the share price having fallen so hard, right, relative to where the strike of the put option is, the put option is deep in the money. I think it must have been, the strike must have been closer to 65, 70 rands. I think we can check that the evidence leader can help us where the average strike of these put options are. Where do we protect the capital that we've put in? Probably around 70 bucks or so. So at around 150 or below 2 rands means that the put option is deep in the money to the extent of the strike price of the capital. So there is value in the structure that can only be realized in the end. Yeah. So the most, great scenario, which is probably not possible is if the share price goes back to 70 bucks, then the put option cannot be exercised because it's at the market and therefore the capital is protected. But at the stage where the share price is, if it does nothing significant, then the put option is in the money. So there is value to be realized from this protection.
I just hope the typists will not type 70 bucks, but 70 rand.
Apologies, Commissioner. I think it's because I'm getting excited. I'm thinking that I'm dealing with the trader in the commissioner.
Okay, all right. No, that's fine. Okay, thank you. We can proceed.
It is strange that Mr. Magula is able to criticize the investment approach to Steinhoff and testified that it was an ill-considered approach when he was unable to apply the same level of consideration to the situation at VBS Bank and warn us timelessly of the looming failure. We needed these skills to alert us about VBS predicament, where Mr. Magula was in very close proximity to the investment as a PIC nominee director on the board of VBS, and where he also held a position as of chairman of credit committee of this bank. Had he applied the same degree of foresight to VBS as he allegedly did to the Steinhoff transaction and told us what was happening there, we could have saved the bank and poor people's hard-earned monies would not have been lost. He did not do so, however, according to Advocate Motau's senior counsel's report on the demise of VBS. Mr. Magula was caught with his hands in the till there. This transaction was leaked by those driving the James Nogu strategy to find reason to get me suspended and dismissed from the PIC. The timing of the leak was quite interesting, as it was on the weekend that Mr. Paul Magula was going to appear before the disciplinary hearing the following Monday. I believe that Mr. Magula was trying to get public sympathy ahead of his disciplinary hearing.
Sorry to, before the evidence leader starts with their questions, on 386, I think it is quite important to spell out the JN, because Jayendra Naidu is JN as well. And in reading this, took me a minute or two to realize that you weren't talking about Jayendra Naidu, and I wondered what strategy that was.
Apologies, Commissioner. Apologies. James Nogu. James Nogu.
Dr. Majila, I have a few questions on Lancaster, and this is to test whether the means satisfied the end, because you point out that the two major concerns of the PIC to try to influence Steinhoff for the betterment was governance issues as well as empowerment. But I'd just like to raise a few. I mean, you mentioned the risk report. I've got a copy of it. I'd just like us to have a look at some of the things that have been raised in that report.
We don't have a copy of the risk report. We have to.
Yes, Mr. Commissioner, this is not one of the documents that was provided to us this morning, unfortunately.
Well, it's mentioned in the, Mr. Commissioner, it's mentioned in the statement, so I assumed that Dr. Majila would have known what at least the report's conclusion was.
Dr. Majila, you didn't have a copy of it yourself?
Of this document?
Yes.
No, Commissioner, I don't have this one.
How much time do you need, Mr. Rulofse?
I'm sorry, Mr. Commissioner, if you would just indulge us with 10 minutes just to have a look at it. We'll try to be as quick as what we can be.
Okay.
Mr. Commissioner, I must apologize again, but I thought that these documents were in the possession of Dr. Machila. He was requested before he drafted his statement to deal with these matters, and I accepted he requested all this documentation from the PIC. But I'll take it up with my learned friend.
No, we note that. We note that, but it appears if he does have a copy, I think you said you don't have it, he would have made it available to council, and I think it's more convenient for council to have a look at it. But we accept what you say, that you thought that Dr. Machila has a copy of it. I think let's adjourn till 15:15, or you let us know if you're not ready by then.
We will indeed, Mr. Commissioner.
Yes.
We're indebted to you.
You're welcome. We'll adjourn for 15 minutes.
sorry guys. I
No,
thought you had it.
that's fine. Do you mind if we use the boardroom quickly?
You're welcome.
Thank you.
We do this independent media, Sagamata. That is okay.
But that would be next week. Is the commission accepted that we would deal with the second?
Yeah, all the seconds I understand.
So that will be next week.
Yeah.
I think the next one then, if we are going to deal with the smaller ones, is VBS.
And that's you.
And there's not much I can ask, except I know that he will
Yeah. And is deeply sad about it. SA Home Loans? Where's VBS?
just before
Okay. So we can finish VBS as well this afternoon, hopefully. Is there any documentation on VBS?
It turned out that we also needed a break.
That's true.
I'm glad that the time wasn't wasted, Mr.
That's
Commissioner.
true, Commissioner.
We thank the commissioners for the adjournment again, and Dr. Machila has had an opportunity to look at the report, Mr. Commissioner, and he's in a position to answer questions on it. Thank you.
Thank you, Mr. Commissioner. Now, Dr. Machila, these questions I ask on the premise of what you've said in your statement, and that is that for those points that are raised in this report, they were either accepted or mitigation was made provision for.
That's correct. That's correct, Commissioner.
On the first page, it's mentioned that Mr. Jayendra Naidu is considered a political exposed person in terms of the PIC PEP policy. I'm assuming that an enhanced due diligence was done in respect of Mr. Naidu.
That's my understanding that was carried out, Commissioner.
And do you know what the outcome of that due diligence was?
My understanding is that it would have been positive because the team recommended that we can proceed with the transaction.
Then if we can refer to page 3 of the report, one of the key risk factors is governance impact. And if I can just read parts of that into the record, it is stated that the risk, firstly, is considered high in terms of the last column, and that is because no governance committee structures are in place, and that given that Lancaster is owned and managed by a single person, any risk in relation to the governance of the company will also affect the PIC.
I think again this risk was accepted because then a board of Lancaster was constituted, and most importantly the interest in Lancaster 101 was then split into 50% PIC on behalf of its client, 25% broad-based BEs to be identified, and then Mr. Jayendra Naidu Consortium, and the board established to populate the BE structures at a later stage.
Then, in respect of the key man risk factor on page 4,
I think, Chair, is related to the previous one in the sense that there's a broadening of the governance structure going forward. So it's no longer a single person. Yeah.
so were you satisfied in respect of governance that with all of the mitigants that were put in place?
Commissioner, we were satisfied. PIC was represented by 2 directors on the board of Lancaster, as well as the 2 consortium as well as the broad-based BE would be represented later on to form a 4-member board. But that obviously would mean that they would then create an appropriate governance structure around the company in line with PIC requirements.
Did the question of what has happened in other transactions of requesting Mr. Naidu to bring along other shareholders ever considered, for instance, with the previous transactions dealt with Tosako and so on, was it ever considered that he bring on other...
to broaden the BE base, Commissioner, if my understanding. Yes, the board was charged with the responsibility of populating the BE consortium. Yeah, the board of Lancaster, where PIC is also represented, was tasked with the responsibility of identifying and populating the BE structures. I don't know if that has happened, but I know they were in the process. But the fall in the share price would have affected that process as well. You know, yeah.
Then,
Sorry, Mr. Chairman, I thought the question was slightly different. I thought the question was, did you consider broadening the consortium, not the BE? The consortium, because the consortium was one individual. As I understood the question, that was the question. It was one individual and remained one individual all the time, even if you then had PIC directors and a B, broad-based B, which we'll come to. But in using Mr. Chaba's reference, when you looked at a marriage with other entities, did you look at saying to an individual, you've come with this size investment, what about having somebody else, whether it is 5% or 50% or 100%? He came with 100% one individual. Did you consider that? That's what I understood the question to be.
That's correct. And we,
as a shareholder?
Yeah, as a shareholder. That's correct, Commissioner. And that's why the PIC had tasked their responsibility to make sure that the consortium of Naidu is also expanded.
the other issue that featured quite prominently in this particular deal is the question of advisory fees. And the question of Symphony Capital having received 100 million in respect of setting up the ratio collar and 49 million in respect of Lancaster 102. Was it ever a concern, was it raised as an issue in the PIC, the fact that Symphony Capital is constituted of 3 white males and not a BEE empowered company?
I don't have the answer for that necessarily, but I would assume that they would have appointed them on the basis of ability to execute derivative and experience around executing transactions of this nature.
And I have seen in other transactions where a pairing is done by the PIC as part of its empowerment initiatives, where you have a more experienced advisor or service provider being paired with a BEE provider. Was that ever considered in this deal?
I think there would have been instances where that is done. I think, probably people who would be better placed to explain the appointment of service providers would be the investment team, because they take care of that part of the business. I have minimal involvement in the appointment of service providers. They are the ones who would do that on behalf of the PIC.
Okay, then the question of the BEE trust, which holds 25% in this special purpose vehicle. We've learned that it was converted into a non-profit company based on a legal opinion.
It's now a foundation.
It's called the Lancaster Foundation, as I understand, or if memory serves me correct. But I think what is of concern there is that it is managed or controlled by Mr. Jahindra Naidu's daughter. Is that a concern for the PIC?
What is that? Is that the BE grouping that was supposed to be identified at the later stage?
That is correct, Mr. Commissioner.
Commissioner, I think that question should be directed to the PIC and most importantly to the board of Lancaster, that we have been the ones approving such a BE grouping.
You don't have any knowledge of it yourself?
I don't have any knowledge of that, Commissioner. So we've appointed, PIC has appointed directors to sit on the board of Lancaster to populate the different BE groupings, including the consortium. So I would expect them to be in a better position to explain that.
An amount of 150 million was dispersed to Lancaster, I believe 102, for what is called value-enhancing strategies. Are you aware of that?
No, I'm not aware of that.
Well, evidence was provided to the Commission by Ms. Morobe to that effect. And Just Veggies, an entity, is a beneficiary of such funds which have been dispersed to Lancaster 102.
I would assume that that would be part of their enterprise development initiative.
That's what I understand.
Yeah, I don't have I know there was that intervention from Lancaster in Just Veggies as part of their responsibility to drive enterprise development. I don't have the details of that. I'm sure the PIC team will be in a better position to provide clarity on that.
Just Veggies is one of the entities which appear on the PIC's schedule of investments which are under distress.
Yes.
How would Lancaster 102 have been introduced to Just Veggies to assisted in respect of that value-enhancing strategies funds?
I don't know, but I know they are involved. I don't know the mechanism, how they came about. Remember, there are also directors of the PIC, again, on Lancaster. So I don't know the nature of discussions because some of them used to sit on IC and they were part of approval of Just Veggies. So there might have been a discussion around how they can use them to save Just Veggies.
But there would have to be approval from Lancaster, or
I would expect the board of Lancaster, or the board that will then approve an investment of that nature within Lancaster would be better placed to explain that. And from the PIC side, I guess, involving how Lancaster got involved into that project. I think the PIC team will be in a much better place to explain that.
then just in respect of the arrangement of the voting pool that or shares that Mr. Jahindra Naidu would be able to exercise on behalf of the PIC, I think I understood your evidence to have been that that arrangement has come to fruition and that it's working as it should or as envisaged.
I think before I left, I think they were working on an arrangement on the voting pool arrangement. That's something that needs to be investigated by the commission. But what I know is that immediately on completion of the transaction, we already gave him a certain mandate. First, he was on the board. He was appointed on the board as expectation. And most importantly, the issues that we've raised around another nominee of the PIC to be on the board, participation in the setting up the terms of reference of the committee that was going to investigate the collapse of Steinhoff. You know, those activities were coming from the PIC and expected to be executed via him. And I think that's what happened.
So you wouldn't know what the mandate of this BEE Foundation would be?
Yeah, I guess, I mean, as I explained, that's something that I'm sure PIC can explain.
Mr. Commissioner, those are my questions.
Can I just ask one or two questions before the Commission asks? Dr. Machila, do you know Mr. Naidu?
Yes, I know Mr. Naidu.
Is he a friend?
No, it's not a friend.
I was sent a message that I must ask you, and it says he practically camped outside your door to wait for this letter to be signed.
Kept. Which letter?
That he spent time, that he wait for you, that he spent time at the PIC to urgently wait for the confirmation of this deal.
I can't remember where he was camping, if he was camping. I'm not aware.
Thank you, Mr. Chair.
Dr. Machila, can we start with 379, and there are a few general things, and I will also refer to the three previous witness testimony, Ms. Marobe, Mr. Rasiroko, and Ms. Lamini. Okay? And I'm sure my colleague will also have a number of questions. Just for clarity, the PIC non-executive director who signed off the approval of Project Sierra, which is L101, was Mr. Mora as the investment committee.
Yeah, I think he was chairman of the investment committee.
So would it not be a conflict for him then to become the board member on a deal he's signed off on? He became the PIC board member on Lancaster. On Lancaster.
Well, that's unfortunately what the board agreed, that he represent the PIC on Lancaster.
Is it common for the person who signs off on a deal to also become the board member, representing the PIC on a deal they've approved?
I don't see conflict because he's sent there by the PIC to protect the PIC's interests.
So you're quite comfortable I can sign off a
Yes.
deal and go on the board and...
If the understanding is that you are representing the PIC and no one else.
At this point in time, when this deal was then approved as L101, was there any change to the consortium membership other than Mr. Naidu?
At that stage, there was no change.
And at the
But
time that you left the PIC, had there been any change to the consortium?
I don't know how much work the board had done in populating the consortium when I left.
Given the size and the issues around Steinhoff, would there be no feedback to you at all in any reporting back to a board about progress made on something like this, or to any of the committees that you sat on?
Commissioner, I wouldn't be surprised if the issue was that Steinhoff had collapsed and a lot of focus was on dealing with Steinhoff collapse.
But you wouldn't then look at what was happening in Lancaster and saying, have these conditions been met?
I haven't checked that.
Okay, but it didn't come up in the course of work? It didn't come up in the course of meetings?
I think there's a team that's supposed to report on this, that tracks, and I don't know if they would have reported at quarterly meetings of the PIC investment committee.
Okay, in terms of, and this I would be interested if this is accurate, Lancaster, in terms of the Steinhoff deal, Lancaster, I understand, acted as underwriter and got a fee of 7.5 million euros. Are you aware of that? And in what way would Lancaster be able to underwrite the Steinhoff deal?
Commissioner, I'm not aware of that role that they are playing.
Can we
As an
try to
under-
find out on the accuracy of that? And then within the funds paid to Symphony, according to Ms. Marobe, in the funds paid to Symphony, which was 100 million rand at one point, it obviously changed as well. Of that, 22.85 million was paid to Lancaster 101. What would that have been for?
I have no idea.
So the issue of fees, if one looks at it as a beneficiary who's now got a huge stake in Steinhoff and Lancaster 101 and 102, seems to have and allegedly has got a 7.5 million euro underwriting fee and a payment of 22.85 million rand for coming to you and saying, I'm available to be on the board of Steinhoff. That's a lot of money.
Yeah. I think, Commissioner, I understand some of the questions. I'm not too close to them, quite frankly, in terms of who pays what sort of fees. I mean, as I
But this
said
would have been in
earlier-
2016, 2017. I would have thought that given the importance of this, you know, the fees paid, I mean, Ms. Marobe says, I think it's Ms. Marobe, or just hang on and I'll tell you in a second who, if it was somebody else, says that Symphony is a company that you use regularly. This is from Mr. Rasiroka. Symphony Capital used extensively by the PIC and responsible for the information memo presented to the PIC, right? And therefore interaction. So if Symphony was paying out of that fee, 22.5 million, would you not be aware of fees of that nature as part of the reports and decisions?
No, Commissioner.
Okay. If I then moved on to page 136. Yeah, you got it. Yeah, Lancaster got it. The note I have is 2.5% of total subscription price as the underwriting commission. You say in 381, one of the most significant influences of Lancaster on Steinhoff was the creation of Steinhoff Africa Retail. Are you saying that Lancaster, Mr. Naidu, was the initiator of creating STAR?
Yes, he was part of the creation of STAR.
He was part of the creation, but this says differently. This says one of the most significant influences of Lancaster was the creation. That implies that Lancaster was in many ways responsible for that. I would not have understood it that way.
I think, Commissioner, if the problem here is that Lancaster is now associated with Mr. Naidu, as opposed to Mr. Naidu being a shareholder in Lancaster, together with other directors that will decide on what strategies to pursue. I think that's
But
the
he is
issue.
he's the sole shareholder. There's no BEE and there's yourselves.
There's a
but
board of directors.
There's a board of
that
directors.
deals with that. So I would expect him not to do this without the board.
Okay.
Yeah.
But Lancaster as a board, the essence of what I'm asking is slightly different. Let's assume there is a board, which we know there's a board. There's two PIC. There's four board members, two PIC, one from Lancaster, which is Mr. Naidu, and one from the trust, which is also, I think, a PIC person at that point in time. What that implies is that it was Lancaster that initiated the STAR approach, and I'm asking whether that is accurate or Lancaster was part of the process, which is different.
I think the proposal came from Lancaster of creation of STAR, from the PIC side, the approach that they are setting up. How they interacted with other players in the formation of STAR, we don't know.
Okay, but the PIC initiated that process.
It will be.
It would be the PIC that initiated the STAR, the approach to create STAR. Is that what you're saying?
My understanding is that it was Lancaster that influenced the creation of STAR and
Okay.
approached the PIC for support
Okay.
to create STAR.
All right, just a couple more questions if I could. The funding, because the whole question here, there was two elements of funding. There was the city funding and the whole discussions around the collar and everything else. And the Steinhoff was supposed to match that with 6.2. Did that ever materialize?
My understanding is that that has not materialized.
That did not materialize at
Yeah.
all. Okay. And
But Commissioner, in the financial statements of Steinhoff, the latest that I saw, they do recognize the liability of 4 billion in the form of pref shares to Lancaster 101.
but Lancaster's balance sheet also has that, and I think they cancel each other out.
Okay.
Yeah? So that is, in essence, an entry on both sides, but it's not cancelled. It's cancelled out. May still be in place, I'm not sure. But not realised in any form. Just, yeah, because it's the 4 billion in pref shares, this did not happen, but it's on the balance sheet of Lancaster. The one other question that I would have is in relation to the conditions precedent. There were a number of conditions precedent that were set, and were any of those met?
Commissioner, I wouldn't know 100% if they were all met, but I would assume that because the transaction ultimately consummated, there would have been some met, and I don't know the timing of how they were met.
Because the question, what Ms. Dlamini said was that when they had to be fulfilled by August 2017, and at that stage they received an email from ENS Africa, who was acting for L101 and L102, that their clients were encountering challenges in fulfilling and asking the PIC to waive fulfillment. And related to the conclusion of the Steinhoff funding instrument, and it was agreed that it would become conditions subsequent. It was then agreed that the PIC would not release the securities in favor of Citi until the CPs were fulfilled. The PIC agreed that it could in fact go through because otherwise it would not have been able to, the deal would not have gone through. And I just wanted to end with Ms. Dlamini's testimony and get your comment on that, where she says, with the benefit of hindsight, perhaps the PIC should have insisted on the commitment relating to the funding of 102 prior to the release of the securities, irrespective of the fact that it would have had a prejudicial effect on Citi's funding and the listing of Star. What would your view be on the question that, a concern that you set conditions post that get cancelled or changed and then nothing actually gets implemented, according to Ms. Dlamini, with hindsight?
Commissioner, I don't have the answer for that one. I don't have deep detail as is explained there to comment on it. Yeah.
2 questions. I actually wanted to follow up about the structure, but then it appears you don't have the actual details.
Yeah, I don't have the deeper details on the structure.
Okay, maybe let me ask it in a general way and say, tell me if I'm wrong. Apparently the security package for L101 was taken from there to L102 to get the 6 billion rands loan from Citi. But during that particular process, when that security was released, Steinhoff was supposed to put in some money, as we said, some preference shares. But another way is the legal department was not part of the discussions and everything. So the security was released. There were no agreements. This is from, I think, from Ms. Dlamini. And now the PIC was quite exposed in L101 because there was no longer that security which has been given to Citi for the loan for L102. Does it make sense? Am I making sense?
I think it does make sense, but I think that's something that the commissioner may have to follow up with the technical team to understand it better. Because my understanding is that the L101 security was used as a security for a loan of 100% owned subsidiary to raise cash against.
The 6 billion, yes.
That's right.
Yes.
So it's still staying within the structure in a way.
Yes.
And if you look at the effects of that, is that it's giving the whole structure better benefits because then L102 was able to invest in a much more solid asset than being in Steinhoff alone.
But it exposed the PIC to the 9 billion, which is in L101.
That's fine, but all I'm saying is that that security is being used to raise cash to fund a more solid asset. That if
Yes,
my logic makes sense,
Yes, it
Commissioner.
does. Yeah, it does.
You know,
it does. Yeah.
It's being ceded to a subsidiary that stand a better chance to now hold a much stronger asset, underlying asset. So net, it gives it, the whole structure better
Some protection.
Yes, better properties, a better risk profile.
Yes. Okay.
But in terms of the mechanics of what, where the execution timelines and delay in certain things, I think the team, the technical team will be able to deal with that better than I can.
Okay. And then the final point is that apparently then the legal team was not part of those discussions and all that, so, and Ms. Lamini said that was an issue because the legal team is never involved in commercial transactions. They normally do the DD and, like risk and legal.
I don't think that's true, really. I mean, the legal team, especially once an approval has been given and it gets to the stage of contracting, they become the leader most of the time because they have that expertise of structuring contracts that should protect the interest of the PIC and its clients. So that they were not involved, I don't know what could have happened. Whether it would have been the departure of Mr. Nesani at that point or something along those lines that may have, resulted in them not being actively involved. I don't know what the reasons were, but that is a stage in a transaction where they actually should be taking the lead in putting together solid legal agreements.
Okay, we shall check the staff on the technical staff with the people there, I think.
Yeah.
The final question is on the BEE in Lancaster. Do you know where we are now? I mean, is that broad-based now or it's still in limbo?
I don't know where we are at this stage, Commissioner.
When you left?
When I left.
Or
When
when you left, how was it?
When I left, I think those structures were not yet populated still. Yeah.
That's a huge problem.
My understanding is that it would have been the issue of the collapse of Steinhoff, whether there is still a solid deal as originally anticipated, because the underlying asset is in trouble. It's not so much value that what is left is now the protection, as opposed to something that's going to generate the dividends and capital appreciation to support the investment.
Yes.
Yeah, so there's no underlying investment to support that structure anymore.
Okay, it's just protection. All right, okay. But I guess probably still has to be done, I'm not sure. Right?
Commissioner, I'm not sure because, Steinhoff is almost gone, really. If you move from 75 to something like 150, and there is this huge liability in terms of the interest and the capital, with some protection coming from the put option. That's also obviously dependent on the performance of Star, which I have no doubt it will do well and better managed and better quality of earnings. So come the end of or the maturity of the structure, when you unwind, there'll probably still be a small liability left to service. I don't believe that because there are no dividends. There's no capital appreciation. It's only capital preservation, portion of capital preservation that is coming through the put. So net, there would be a loss in the structure, but not to the extent that would have been without a put option.
Yes. So you are saying then net, there's no value which a BE grouping would benefit from.
will benefit from.
Okay. All right. Thanks. I'm done.
Do I understand you correctly, or do I understand the position to be with regard to directors who have been appointed on investee companies, get instructions from your board, the PIC board, as to what to do or say in that investee company, and then have to come and report back? What is the position?
Not quite. That has not been perfected. And this is something that we have debated and even called in experts when I was still at the PIC to guide on what are the things that we can contract with our nominee to report on, on our behalf or execute on our behalf, but at the same time knowing that they owe their fiduciary duty to the company, So I don't think that was ultimately documented properly, in something that's like a service level agreement, if you will, that it has not gone that far. So most of the things will be informal, to say, we would like to have a board seat, we would like you to drive this and this and this on our behalf, and then they go and raise those matters without necessarily carrying a letter that says we shall do this. So we have to run a parallel process of writing to the company directly and discussing with our director to see that they can influence such an outcome on our behalf. But Commissioner, when I left, there was no standard template that says every director of the nominee director of the PIC, this is a service level agreement, you shall report on these matters, because they will also require approval from the board of directors of the company that they are comfortable that the nominee director of the PIC can report on these matters,
Obviously, if the PIC appoints these directors with a view of influencing whatever they'd like to influence in the investee company, you would expect them to come back and say, we have put this on the table and this is the response that we got, and so on.
That's correct. That is the expectation. But there has been instances where that was not forthcoming. And we have good examples in VBS where certain things were not done, some of which we believe should have been done anyway. Whether you had a particular mandate or not, there's an obligation to say, this is an investment of the PIC, it must perform, generate, and I'm getting paid by the PIC to make sure that it generates so that the portfolio can grow. And so it's in my best interest to make sure that that happens, and a certain reporting becomes crucial, to make that happen. So that had not happened in some instances to the PIC's liking.
Yes, thank you.
Mr. Commissioner, it seems to be the business of the day. Just to plan for tomorrow, we have 2.5 hours tomorrow. We will do our level best to deal with VBS, SA Home Loans, Daybreak Farms, and EcoBank. But there's also the Erin investment that is still on the table. But we expect, as we've done today, to make very good progress tomorrow and hopefully deal with all these transactions so that we can spend next week on the Sukanyalo group of companies.
It sounds ambitious, but we'll see. Let's see what happens. We'll then adjourn until 9:30 tomorrow morning.